performance in the UK. The economy grew faster than expected in May, helped by growth in services and house building. GDP rose 0.4%, double the 0.2% that analysts had expected. The strong performance is a boost for the new government, but means the Bank of England may delay cutting interest rates. Let's talk now to Chief Economist and Global Strategist at ADM Investor Services International, Marc Ostwald. Good to see you again, Marc. Thanks for joining us. So, looking at these figures, we saw growth double what analysts had expected in the UK. So, what's happened?
Well, in part, in May, it above all reflected a recovery from the bad weather impact in April, where GDP had been flat. But what it does is basically keep second quarter GDP on course to repeat that strong performance, well, relatively strong performance of 0.7% in Q1. The strength was above all driven by services such as professional, scientific and technical, a rebound in retail and wholesale, and construction. Both of those had actually been very, very weak in the April report. So there's a little bit of catch-up going on there. As far as the momentum goes, it's stronger than expected, but I always think one needs to keep this in perspective insofar as we've obviously seen this week the Barclaycard consumer spending numbers and the BRC retail sales numbers for June, i.e. the month after, which were weak, both fell in year-on-year terms. So there is a lot of volatility which is weather-induced, and I still feel that underlying everything is some general feeling of cost of living pressures still being there. But with the stability of a new government, perhaps people will feel that things are turning out somewhat better. And that could set the UK economy fair for reasonable growth in the second half of the year.
Well, let's talk about that new government in the UK. And the new finance minister has said that economic growth is a national mission. How are they planning to do it?
Well, there are a lot of measures, but in terms of fiscal terms, there's not a lot of room for manoeuvre. They promise not to raise taxes, but the prospect of any tax cuts are not there. They want to increase home building to a pace which, to be quite honest, is not really achievable. They're talking about 300,000 new homes per year. We haven't seen the best level since 1997. And that was the level in this year was 250,000. And for that to happen, they will basically, not only for this, but also for all the things they want to do in terms of speeding up the energy transition, getting private investment mobilized for the energy transition. They really need to speed up the planning process. And that's going to be a lot more complicated. They will also need to see some changes in terms of land use reform. None of this is easily done at speed. So, yes, absolutely admirable. And I think in terms of how they've approached this, in terms of giving the impression of hitting the ground running, by above all having their first cabinet meeting on the day after the election, but at the same time also going through an exercise in expectations management, namely saying we've got a lot to do and there are a lot of difficult choices to make, which there are. Highlights that this isn't, they're going for growth is not something which is going to, there is no switch to flick, there are no fingers to flick to suddenly turn the lights on and the UK economy is going to start outperforming others. It may well outperform a lot of economies in the Eurozone, particularly France and Germany, but that's not really much of a benchmark at the moment, given growth in both countries is very sluggish.
Well, I want to ask you about something else which is looking for growth, which is listings in the UK, IPOs. There's been a big shake-up of the rules to try and make it easier for companies to list on the London Stock Exchange. Why now, and is it going to work?
Well, first of all, this was actually basically something which was outlined by the previous government. Why now? Because there's this feeling that London as a financial centre has to some extent lost a lot of traction, above all to the US, to a certain extent to Asia, simply because Asia is a big growth region. And they want to try and get a piece of the action, above all in the tech sector, to make things more attractive to companies to come and list in London. Nevertheless, I wonder how much success they will have with it. It's certainly something which would be positive for the UK economy, in terms of allowing more companies to float, given that the pool of companies that have floated recently has been very, very meagre.
Marc, good to talk to you as always. Thank you for joining us. That's Marc Ostwald from ADM Investor Services International.